Intel soars amid buyout rumors involving Musk and Qualcomm. Date: January 20, 2025. Summary: Intel stock surged by 9.25% on January 20, 2025 amidst rampant speculation concerning a potential buyout involving industry giants Elon Musk and Qualcomm. This increase in stock value has been fueled by various indicators suggesting an impending acquisition that could reshape the company's future. In the world of technology and finance, speculation can often drive market behavior, and that was certainly the case on January 20, 2025 when Intel's stock price surged by 9.25%. The increase was primarily attributed to rumors that the semiconductor giant might be the target of a buyout involving high-profile figures such as Elon Musk and Qualcomm. Background: Intel has faced considerable challenges in recent years, with its stock plummeting by 69% since April 2021. The company has struggled to keep pace with competitors in the semiconductor industry, particularly as cloud-based services increasingly shift from traditional CPUs to GPUs produced by companies like Nvidia. Financial reports indicated that Intel's operating cash flow had significantly decreased, falling from $36 billion in 2020 to just $9.7 billion in 2023. The company had announced plans to invest $26 billion in 2023 to revitalize its operations, but these efforts have not yet shown promising results. The challenges that Intel faces are not merely financial. They also pose geopolitical risks, particularly concerning U.S. semiconductor production. Industry insiders have warned that Intel's ongoing struggles could jeopardize American chip manufacturing capabilities, making the prospect of a buyout more appealing as a potential solution to stabilize the company. The buyout rumors. The rumors regarding a possible acquisition gained momentum, with reports linking Qualcomm and GlobalFoundries, a prominent semiconductor foundry, to Intel. Analysts noted unusual jet activity at Mar-a-Lago, a venue closely associated with Elon Musk and other tech leaders, leading to speculation that strategic discussions might be taking place. The convergence of these indicators has heightened interest in the potential for a buyout. Qualcomm, a major player in the semiconductor space, has been looking to expand its capabilities and product offerings, making Intel an attractive target. The involvement of Musk, known for his ambitious ventures and investments in technology, has only added to the allure of the rumors. Market reaction. The stock market's reaction to these rumors has been significant. Following the news, Intel's stock price saw a sharp increase, reflecting the market's sensitivity to potential mergers and acquisitions in the tech industry. Analysts have pointed out that such movements in stock prices are often indicative of the broader market sentiment regarding a company's future prospects. Moreover, the resignation of Intel's CEO Paul Gelsinger earlier in the week added another layer of uncertainty to the company's future, prompting investors to consider the implications of leadership changes in the context of a potential buyout. Conclusion: the recent surge in Intel's stock price amid buyout rumors involving Elon Musk and Qualcomm underscores the volatile nature of the tech market and the influence of speculation on stock performance. As Intel continues to grapple with financial difficulties and increasing competition, the prospect of an acquisition has emerged as a beacon of hope for investors looking for a turnaround strategy. While the details surrounding these rumors remain speculative, the convergence of multiple factors, including the involvement of high-profile industry leaders, ongoing financial struggles, and geopolitical considerations, paints a complex picture of Intel's current situation. The market will undoubtedly be watching closely for further developments as the speculation unfolds, potentially reshaping Intel's trajectory in the highly competitive semiconductor landscape. The situation surrounding Intel's stock surge amid buyout rumors involving Elon Musk and Qualcomm presents several counterintuitive elements that challenge typical market behavior and assumptions about corporate health and investor sentiment. 1. Stock price reaction to buyout rumors. The immediate and significant rise in Intel's stock price, 9.25% following buyout speculation, is a classic example of how markets can react positively to news that typically would indicate instability or weakness. Normally, rumors of a company's acquisition might suggest financial distress or operational issues that would lead to a decline in stock price. However, in this case, the anticipation of a buyout appears to inject confidence into the market, suggesting that investors may prefer the idea of a corporate takeover as a potential lifeline for Intel, rather than viewing it as a sign of failure. 2. Context of financial struggles. Intel's recent financial history shows a dramatic 69% drop in stock value since April 2021, alongside a significant decrease in operating cash flow from $36 billion in 2020 to $9.7 billion. Conventional wisdom suggests that a company in such dire straits would experience further declines in stock prices. Poor financial performance typically leads to a loss of investor confidence. Yet the prospect of being acquired seems to overshadow these financial troubles, leading to a paradoxical increase in stock value. 3. Market sensitivity to executive changes. The resignation of Intel's CEO Paul Gelsinger typically signals instability and can precipitate a drop in stock prices due to fears about leadership and future direction. However, in this instance, the leadership change seems to have coincided with heightened speculation about a potential buyout, which investors interpreted as an opportunity for a turnaround rather than a cause for concern. This reaction suggests that markets can sometimes favor uncertainty about leadership when it is associated with new opportunities rather than a steady but stagnant trajectory under existing management. For a geopolitical context, the discussion of Intel's potential failure presenting geopolitical risks adds another layer of complexity. Typically, concerns about geopolitical risks would lead to a flight from stocks deemed vulnerable. However, here the narrative surrounding Intel's role in U.S. chip production appears to bolster investor sentiment, framing the situation as not just a corporate issue but one of national importance. This suggests that investors may be motivated by a sense of duty or patriotism, which is counter to the usual profit-driven motivations seen in market behavior. 5. Rumor origin and market speculation. The rumors about a buyout being linked to activities at Mar-a-Lago and the involvement of high-profile figures like Elon Musk create a narrative that seems to blend entertainment with investment. Normally, serious financial decisions are driven by solid data and fundamental analysis, yet the involvement of celebrity figures can create a speculative frenzy that overrides traditional metrics of financial health. This indicates that emotional and psychological factors can play a significant role in market movements, contrary to the rational investor theory. 6. Comparison to competitors. The mention of competitors like Nvidia successfully migrating cloud companies away from Intel's CPUs to GPUs highlights a significant shift in the tech landscape. This would typically position Intel as a declining force in the industry. However, the prospect of a buyout serves to redirect focus from competitive weaknesses to potential synergies and growth opportunities that could arise from a merger. The market's readiness to overlook competitive disadvantages in favor of speculative gains from a buyout reflects a counterintuitive prioritization of future potential over current performance. In summary, the Intel case exemplifies a complex interplay of investor sentiment, market psychology, and the influence of external narratives that can lead to unexpected outcomes in stock behavior, particularly in the face of financial adversity. The report on Intel stock surge due to buyout rumors involving Elon Musk and Qualcomm is filled with important details that many may overlook, which carry significant implications for the tech industry and financial markets. Here are the key overlooked aspects and their significance. 1. Implications of CEO resignation. The resignation of Intel's CEO Paul Gelsinger is a pivotal event that many might not fully grasp in terms of its impact on investor sentiment and corporate strategy. Gelsinger's departure raises questions about the company's leadership and future direction, which can lead to volatility in stock prices. The report suggests that his resignation has contributed to market anxiety and speculation surrounding Intel's viability as an independent entity. Investors often react strongly to executive changes, especially in companies struggling to regain market leadership. Understanding this context is crucial, as it indicates a lack of confidence in Intel's current strategy and operational capabilities. 2. Geopolitical risks associated with Intel's performance. The mention of geopolitical risks linked to Intel's potential failure is significant yet might be glossed over by many. Intel plays a critical role in the U.S. semiconductor landscape, and its decline could affect national security given the strategic importance of chip manufacturing. If Intel were to fail, it could exacerbate supply chain issues in the semiconductor industry, which is already pressured by global dependencies and trade tensions. This aspect underscores the broader implications of market movements extending beyond mere financial metrics to encompass national interests and economic security. 3. Market sensitivity to buyout rumors. The report highlights the market's sensitivity to buyout rumors, which is a common phenomenon but often underestimated in terms of its psychological impact on investors. The 9.25% jump in stock price indicates how quickly market sentiments can shift based on speculation. This reflects a broader trend in the tech industry where mergers and acquisitions can be perceived as lifelines for struggling companies. Investors should recognize that such movements are not only based on financial fundamentals but also on speculative behavior, which can lead to increased volatility. 4. Financial metrics and long-term viability. The decline in Intel's operating cash flow from $36 billion in 2020 to $9.7 billion is a stark indicator of the company's financial health, yet many readers may not fully appreciate the long-term ramifications of this trend. This dramatic drop in cash flow raises concerns about Intel's ability to fund its operations, invest in R&D, and compete effectively against rivals like Nvidia. Investors must consider how sustained financial difficulties could lead to a downward spiral where the company becomes less competitive, further impacting its stock price. 5. Potential for strategic partnerships. The mention of potential links between Qualcomm and GlobalFoundries alongside Musk's involvement hints at the possibility of strategic partnerships that could reshape the semiconductor landscape. Such collaborations might not only help Intel regain market share but could also signal a shift in industry dynamics. Investors should be aware that the formation of alliances can lead to innovative product development and improved operational efficiencies, which could have positive long-term effects on stock performance even if the current outlook appears bleak. 6. Historical context of Intel's decline. The report notes that Intel stock has declined 69% since April 2021, which is a significant historical context that should not be overlooked. Understanding the reasons behind this decline, such as increased competition, supply chain challenges, and shifts in consumer demand, can provide insights into the company's current vulnerabilities. Investors should consider not only the immediate effects of the buyout rumors but also the underlying issues that led to Intel's troubled state in the first place. 7. Impact of external market conditions. The broader economic environment, including inflation rates, interest rates, and global supply chain disruptions, plays a critical role in shaping investor perceptions and corporate strategies. The report does not delve deeply into how these external factors might influence Intel's potential for recovery or acquisition. Understanding this interplay is essential, as external economic pressures could either exacerbate Intel's struggles or provide opportunities for stabilization and growth through strategic buyouts. In conclusion, while the report outlines the immediate effects of buyout rumors on Intel's stock price, the broader implications, from leadership changes and geopolitical risks to financial health and market sensitivities, are significant and warrant careful consideration by investors and industry stakeholders. Recognizing these nuanced factors can lead to a more informed understanding of Intel's position in the market and the potential outcomes of the ongoing speculation surrounding its future. 1. Market reactions to acquisition rumors. The surge in Intel's stock price, which increased by 9.25% on January 20, 2025, underscores the market's sensitivity to rumors regarding potential acquisitions. The involvement of high-profile figures like Elon Musk and companies such as Qualcomm adds credibility to the speculation, prompting investors to react positively. This phenomenon highlights how external narratives can significantly influence stock performance, particularly in a volatile industry like technology. 2. Financial challenges facing Intel. Despite the stock price increase, Intel has been grappling with severe financial difficulties, including a staggering 69% decline in stock value since April 2021 and a drop in operating cash flow from $36 billion in 2020 to $9.7 billion. Such financial strain raises concerns about the company's viability and highlights the urgency of finding a solution such as a buyout to stabilize operations and restore investor confidence. This aspect invites a deeper exploration of the underlying causes of Intel's struggles and the implications for its future. 3. Geopolitical implications of Intel's status. The potential failure of Intel, a key player in U.S. semiconductor production, poses significant geopolitical risks. Industry insiders warn that a decline in Intel's operations could affect the national security landscape given the critical role of semiconductor manufacturing in various technologies. This point opens up a broader discussion on the intersection of corporate health, national interests, and the global semiconductor supply chain, particularly in light of rising competition from countries like China. 4. Leadership changes and their impact. The resignation of Intel's CEO Paul Gelsinger adds another layer of uncertainty to the company's future. Leadership transitions can significantly affect company strategy, investor sentiment, and operational stability. The timing of Gelsinger's departure amid acquisition rumors raises questions about the internal dynamics at Intel and how new leadership might navigate the challenges ahead. This aspect warrants an examination of the role of leadership in corporate resilience and the factors that influence successful transitions in troubled companies. 1. The Hewlett-Packard and Compaq merger 2001. In September 2001, Hewlett-Packard HP announced its plan to acquire Compaq in a deal valued at approximately $25 billion. The merger faced significant opposition from shareholders and industry analysts who questioned the strategic rationale behind the acquisition. However, HP's leadership, particularly CEO Carly Fiorina, argued that the deal would create a more competitive company in the rapidly evolving tech landscape. Following the announcement, HP's stock initially surged, reflecting investor optimism about the potential for increased market share and improved product offerings. The merger ultimately faced challenges in integration and market competition, leading to a complex legacy for both companies. 2. The AOL and Time Warner merger 2000. In a landmark transaction, AOL announced its acquisition of Time Warner in a deal valued at $165 billion, marking one of the largest mergers in history at that time. The merger was heralded as a convergence of traditional media and the burgeoning internet sector, promising to create a powerhouse capable of dominating the media landscape. Initially, the stock market reacted positively to the news, with both companies experiencing a surge in stock prices. However, the merger quickly became infamous as the dot-com bubble burst, leading to significant financial losses and operational challenges. The anticipated synergies failed to materialize, and the merger is often cited as a cautionary tale about the pitfalls of high-profile mergers and acquisitions. 3. Disney's acquisition of Pixar 2006. In January 2006, the Walt Disney Company announced its acquisition of Pixar Animation Studios for approximately $7.4 billion in an all-stock transaction. This acquisition was viewed as a strategic move to revitalize Disney's animation division, which had struggled in the years leading up to the deal. The merger was met with enthusiasm from investors, as Pixar had established a reputation for producing blockbuster animated films. Following the acquisition, Disney experienced a resurgence in animated feature films, and the partnership proved to be highly successful, culminating in numerous critically acclaimed movies and significant box office success. Disney's stock price also saw positive momentum as the collaboration reinvigorated the company's brand and market position. Future outlook: predictions for Intel amid buyout rumors involving Musk and Qualcomm. As Intel's stock experiences a surge fueled by rumors of a potential buyout involving prominent figures like Elon Musk and companies such as Qualcomm, the future of the semiconductor giant remains a subject of intense speculation. This situation presents a variety of potential scenarios that could unfold in the coming years. 1. Increased mergers and acquisitions in the semiconductor sector. The rumors surrounding Intel are indicative of a larger trend in the semiconductor industry where consolidation may become a necessity due to increasing competition and technological advancements. If a buyout occurs, it could pave the way for more mergers and acquisitions, leading to a more concentrated market where only a few players dominate. 2. Revitalization of Intel's operations. Should an acquisition by Qualcomm or another tech giant materialize, it could lead to a significant restructuring of Intel's operations. This might involve infusing capital into its foundry division or pivoting its business model to adapt to the evolving landscape of AI and cloud computing. Investors could see revitalized growth trajectories if the new leadership effectively capitalizes on Intel's existing technologies and workforce. 3. Geopolitical implications. Intel's potential acquisition may carry geopolitical ramifications, particularly in the context of U.S. chip production. As Intel plays a critical role in the semiconductor supply chain, its stability is vital for national security. A buyout could lead to increased scrutiny from regulators, impacting the pace and nature of future investments in domestic chip manufacturing. 4. Market sentiment and stock volatility. The current volatility in Intel stock driven by speculation highlights how market sentiment can significantly influence stock performance. If the buyout rumors persist, Intel stock may continue to experience fluctuations reflecting investor reactions to ongoing developments. However, if the rumors prove unfounded, it could lead to another dip in investor confidence. 5. Focus on innovation in R&D. If Intel remains independent or is acquired, the necessity for innovation will be paramount. The company must invest in research and development to regain its competitive edge against rivals like Nvidia and AMD. A renewed focus on cutting-edge technologies, particularly in AI and high-performance computing, could result in Intel re-establishing itself as a leader in the semiconductor space. 6. Impact on workforce and talent acquisition. An acquisition could lead to changes in Intel's workforce dynamics. New leadership may bring in fresh talent or restructure existing teams to align with strategic goals. This could foster a culture of innovation or conversely lead to layoffs if cost-cutting measures are implemented. 7. Consumer and enterprise market dynamics. The potential buyout could influence Intel's approach to its consumer and enterprise markets. A merger with Qualcomm, for instance, could create synergies in mobile and IoT sectors, allowing Intel to expand its market reach and adapt its product offerings to meet changing consumer demands. 8. Long-term financial stability. The financial trajectory for Intel largely depends on the success of any potential acquisition. While buyouts can provide immediate capital relief, the long-term success will depend on strategic execution post-acquisition. Investors will be keenly watching how effectively the new entity manages its resources and capitalizes on growth opportunities. In summary, the future of Intel in light of these buyout rumors presents a complex interplay of opportunities and challenges. While the potential for revitalization through acquisition exists, the company must navigate market volatility, geopolitical considerations, and the imperative for innovation. Stakeholders will need to remain vigilant as developments unfold, with the understanding that the semiconductor landscape is rapidly evolving and will require strategic foresight and adaptability.